Welcome back to another explainer. Let me ask you a question right out of the gate. Have you ever felt that deeply frustrating FOMO when you see a massive market run and you're just sitting there thinking, man, how did I miss the signs? Well, today we are breaking down the actual mechanics of industry analysis, specifically how you can spot these structural shifts early, way before the rest of the world even catches on. All right, so here's our roadmap for today. We're going to cover the early investor secret, how to spot long-term growth trends, evaluating market dynamics, and finally, avoiding beginner investor traps. Let's just dive right in. Section 1. The Early Investor's Secret, Shifting Your Paradigm. Okay, so here is the ultimate question you really got to ask yourself. Why is it that some investors, you know the ones, why do they consistently find these massive winning opportunities before everybody else? Like, how are they quietly positioning themselves years before a sector ever hits the mainstream financial news? I mean, just think about these rapid-fire hindsight trends. Artificial intelligence, clean energy, healthcare innovation, cloud computing, cybersecurity. We all look back and say, I wish I saw that coming, right? But here's the thing. The investors who actually got in early weren't relying on luck. They were looking at an entirely different data set. And that brings us to this absolutely crucial paradigm shift. Smart investors don't just analyze companies, they analyze industries. You literally have to stop looking at individual balance sheets in a vacuum, totally isolated from the macroeconomic world around them. Picture this. You've got two fantastic companies, great management, solid financials, but one is in a shrinking industry and the other is in a rapidly growing one. The difference in long-term opportunity there is just staggering. It's like swimming against the current versus riding in a speedboat. Even a brilliant company is going to struggle if its industry is dying out, while a pretty average company can absolutely soar if it has the wind of a powerful sector trend at its back. Moving on to Section 2, Spotting Long-Term Growth Trends Looking Outward. So steps 1 and 2 of our framework are all about global trends and consumer behavior. Because look, capital always follows where the world is moving over the next 5 to 10 years. Just think about how remote work fundamentally changed the demand for enterprise software almost overnight, right? When you can spot these behavioral shifts early on, you're going to find these uncrowded opportunities well before Wall Street realizes what's happening. Then we have step 3, follow corporate spending. This is huge. Smart companies are out there investing billions with a B to prepare for future demand. To put that into perspective, just look at how tracking Amazon's internal server spending years ago would have completely tipped you off to the massive cloud computing boom of AWS. Following the billions being dropped on R&D by these massive businesses is an incredibly loud clue for future sector growth. All right, Section 3, Evaluating Market Dynamics, Business Mechanics. Which brings us right to step 4, mapping structural imbalances. Listen, when you've got exploding demand crashing into a hard limit on supply, the result is extreme profit potential. It's basic economics. Say global demand for specific semiconductor chips just skyrockets, but the manufacturing supply remains tightly bottlenecked. Well, the few companies operating in that sweet spot are going to benefit massively. But hey, demand alone doesn't guarantee a win. That's where step 5 comes in, which requires us to evaluate the competition. You really have to differentiate between a super crowded space where way too many companies are just fighting for survival, which completely destroys profit margins, by the way, and a much healthier structure where just a few strong leaders are dominating the space. Next up is step 6, regulation factors to watch. And I can't stress this enough. This is absolutely critical for sectors like healthcare, energy, infrastructure, and banking. You've got to keep a really close eye on policy changes, government incentives, tax benefits, and industry restrictions. Just speaking impartially here, government regulation is a huge double-edged sword. It can create massive windfalls of opportunity through subsidies and incentives, or it can create severe risks through heavy restrictions. It fundamentally shapes profitability. Step 7 involves aligning with economic cycles. You really need to understand where the broader economy currently sits, because that totally dictates intelligent positioning. You definitely don't want to be heavily leveraged in high-growth travel tech when the economy is pulling back into uncertainty, just like you don't want to hide in defensive utility stocks when a massive growth cycle is just kicking off. And then we have step 8, which is honestly a highly underrated strategy, talent migration. You need to be tracking where the top engineers, researchers, and elite entrepreneurs are literally migrating to. It can be as simple as watching LinkedIn job changes for top AI engineers. World-class talent follows opportunity. Watch where the smartest people in the room are heading, and I guarantee you'll find the next big boom. Finally, Section 4, Avoiding Beginner Investor Traps, the Reality Check. So, mistake number 1 is waiting until an industry is famous. I know, it is so psychologically tempting to wait for mainstream validation. But guys, by the time a sector is the top story on every financial network, the prices are already baked in. They're high, and the risk of a pullback is rising fast. The smart investors do the exact opposite. They study quietly, they observe the trends, and they build their conviction long before the crowd ever arrives. Mistake number 2 is confusing internet hype with real opportunity. Look, just because a cool new tech gadget or a niche sector is trending endlessly online, that does not mean it actually has the structural mechanics to be profitable. Real industry analysis goes far, far deeper than exciting headlines, viral posts, and social media hype. You've got to verify that hype with the actual fundamentals we've just discussed. So here it is. This is your master blueprint, the 8-point framework. Global trends, consumer behavior, business spending, supply and demand, competition, regulation, economic cycles, and talent movement. You might want to grab a screenshot of this, actually. Because all that complex Wall Street jargon, it simplifies beautifully into this single, incredibly powerful toolkit. As we wrap up this explainer today, I really want to leave you with this final, somewhat provocative thought. I want you to stop agonizing over the question, what single stock should I buy today? Just stop. Instead, lift your head up, look out at the horizon, and ask yourself, what industries are actually shaping the future? Because the investors who take the time to understand those industries early are the ones who consistently find the most massive opportunities long before the rest of the world even notices. Thanks so much for learning with me today. Stay focused out there, and I'll see you in the next explainer.